Hi and welcome to the Market Alert for Friday, 29th of April 2022. So recession on deck. US GDP shockingly contracts in quarter one driven by inventory exports plunge. One more negative GDP print quarter and technical recession. Here we come. Well, let's just have a look at those numbers, shall we? Because obviously they were forecast yesterday to be 1.1 and they came in at minus 1.4, previous 1.6. Don't forget this is quarter on quarter, so the first quarter complete came in at minus 1.4 as the previous quarter to the end of 21 came in at 6.9. So absolutely crushing and devastating. But what did the market do? Well, it moved to the upside. What the was that? Stocks explode higher as US economy heads into recession. The ammo for a massive squeeze is all there. It's incredible, isn't it? This is why I always say trade what you see, not what your opinion is, because they will just keep moving this market to the upside to keep the elites' wealth growing. Doesn't matter what's thrown at it. I mean, why are they going to worry about a minus 1.4% GDP when we had the 2008 crisis and they printed billions and the elite became even richer? So, what's one economic news item? Sell low, buy high, pain continues. Market does what it does best, frustrate everybody, and that's what I'm on about, because it's pointless having an opinion on, apart from it's going back to the all-time highs, because that's been the pattern for the last 14 years. Outside of that, you might as well just trade what you see, and that's why I use the technical indicators. But I love to know the fundamentals as well. It's just that they don't make any sense, do they, anymore? Oops, our bad international mafia fund director admits we printed too much money. Mostly we get lies, spin and obfuscation from central bankers, politicians and bureaucrats, but every once in a while one of these people accidentally wanders into the truth. Well, we know that it's in the title, International Mafia Fund. I mean, it's no surprise, is there? I mean, that's why we've got the hyperinflation now as well. Yen craters to 20-year low as Bank of Japan stuns markets with daily fixed rate operations. More rigging, just to defend the yen. To make the announcement of buying unlimited bonds at a fixed price in the policy statement, the BOJ is sending a very strong message that it is firmly committed to continuing the super easy policy. You can't make this crap up anymore. But then again, why should we be surprised? Don't be surprised to see the US and the UK start printing as we head into recession as well. And here's another disconnect in the markets. Gold demand surges in first quarter. Total demand for gold came in at 1,234 tons in quarter one, was the highest quarterly demand since the fourth quarter of 2018. And yet the market has tanked and been crushed as well. Again, you can't make it up, can you? And this is the problem with derivatives. When you have a derivative of something, i.e. a paper contract, you can then slam the price despite the fact that there is a physical shortage of gold and silver, and hammer the price down to suit the narrative and the agenda. And talking of agendas, this really is disturbing. I spoke about the UK giving approval to the Ukrainian government to lob a few bombs over into Russia yesterday. It was a bad move. This too. As Gerald Celente has said for years and been scorned for, laughed at and mocked, that when everything else fails, i.e. the financial system, they take you to war. And as I've said in the Market Alert over the last few weeks, and I don't want to get political, but it's just a pattern of the agenda of the elite, the WEF and all these other crooks, is that they never do anything for 5 minutes. These things go on for a long time, and I said it wasn't going to end in a week. And all of those ceasefire announcements we had on a daily basis, I said at the time, it's complete BS. You don't wave a white flag in these situations. It's being used as a part of the reset for the financial system, the devaluation, or rather the saving of the dollar at the moment until it's devalued to zero. It's unbelievable. And now we're up to our necks in it. And also the US have printed $33 billion as well to supply further arms to the Ukrainian government. I'm not getting into the politics of it. It's the financial side and the sort of the bigger picture of where this actually goes. I detest war more as much as anybody else does. But There is a pattern here that goes back through history. When all else fails, they take you to war. Anyway, economic news for today. Well, it's going to be interesting because apparently there's no inflation in Europe. We've got 7.5 forecast, 7.7 before. That's the flash estimate. Core CPI apparently is going to drop to 0.3. Honestly, talk about smoke and mirrors and sleight of hand. It's incredible, isn't it? Absolutely incredible. So there you go. Apparently there's no inflation in Europe according to this. We've got the year-on-year flash estimate, but so it's going up a bit. Wow. And yet they can't raise rates by 0.25%. They're not doing anything in Europe until the end of the year. Because I'll tell you why. They're hoping and praying that it disappears. That's what they're hoping for. Say, we got through that. Whew, that was a close call. So it doesn't matter. Again, you can't write the script, can you? Well, actually, a 3-year-old could write the script. Anyway, back to the markets for yesterday. You can see the Dow moving up sharply yesterday. And in fact, the Dow has moved. If I just draw this in, since we've got a bottom in here, that's a bit more than that. Let me just redo that. I think it's somewhere in the region of, that's more like it. So we've got high to low so far, 1,000 points up on the Dow, looking bullish again today as well. So the Dow moving sharply up overnight, moving up on all of the the news yesterday, the GDP numbers, and continuing to do so overnight as well. Whether it can take out this resistance here to the left, we'll have to wait and see, but if it does, then we'll continue high. So let's draw in some numbers to the upside just in case. I think we're approaching 89. Yeah, we're just in that ballpark now, been through all of the other ones there. So watch out for 34,000 as a resistance level. There's certainly going to be some resistance there, and also these two other areas of resistance in the Dow as well. But it's Friday, going into a bank holiday for the UK. So don't be surprised if they manage to move the market higher, unless yesterday's stunt in moving the market higher is so that they can tank the market today. But there are the figures for the upside for the daily chart of the Dow. Yesterday, the reaction initially with the GDP figures was to move lower. The market traded down, found support at the previous day's close. We were oversold, crossover, parabolic market, then moving back to the upside, and you can see this as well as it traded up yesterday. 814 points in the Dow yesterday off that low. It just kept moving all through the afternoon and the evening. It was relentless and never stopped, as you can see, and now is heading back to yesterday's high, which I suspect it will have an attack on at 7 a.m. In the DAX, a similar picture. Let's pick up the daily chart first. You can see the market moving higher there. If we go back to here, you'll see that the market has put on also 638 points since hitting this low here and trading up to the resistance of 14,161 where the market's currently trading. So again, the DAX moving back to the upside through the 89, just waded through everything else yesterday, as you can see there. So let's draw in some new fibs from this high to this low and see what happens today. We've actually got at this level a 62% retracement, along with that 14,161. But through this, we're already taking out the 20 bar moving average. We've got the 78 with the 50 EMA. Once we get through this, the 89 is fine. And then we move on to the high here of 14,600. Keep an eye on that as well, not necessarily for today, but going forward. While I'm thinking about it, Monday the UK markets are closed as well, as it's May Day bank holiday. So yesterday we saw the DAX moving to the upside, trading up to the R2 initially, and then making its way back for the GDP numbers. The market trading down to the previous day's close, oversold, green, crossover market all the way back. Overnight, bit of profit taking here, but again, once we became oversold, crossover at the close, the market moving to the upside once more. In the 5-minute chart for yesterday, just move this over, you can see from the kickoff of yesterday's futures session, the market was sitting on the 200 MA, oversold, and the futures market came in, and then they continued despite the fact the market that was already overbought. They continued to move it, and once we had a bit of divergence in the markets, we had a bit of a pullback there. You can see the market coming back 100 points to oversold, retracement, crossover, sitting at the R1. This is the R1 line, and also the BRN before the market retraces to 78% here, overbought, and then back down. GDP numbers come out. The market trades sideways, follows the Dow down till we get overbought, then we get divergence as the momentum starts to switch, and also again trading down to the previous day's close, which was the second time it had done this from the morning, where it traded down and then moving back to the upside, all for the remainder of the session and then into the evening. You can see the market gapping higher here, just leaping and trying to move to the upside at the R1 at the moment, and the market making a bit of a pullback there. It'll be interesting to see if it can hold at this level, and whether it's, like I say, it's been a ruse to bring people into the market, as that headline said, what the F, because it just doesn't, fundamentally it makes no sense. But then since when have fundamentals had any play in the market? Since 2008, and if not before. So a quick look at the currencies. If I can find the yen, continuing to move higher. The GBP, Japanese yen, as this comes off the 89%. So I'll be looking for any sort of resistance along the way. Let me just redo that, get the right place. So you can see there, we're already through 38, coming back towards 50 yesterday. Need to get back through this level in order to move higher. In the 30-minute chart yesterday, it was lift off from the open, the DP providing the support for the market. We're already oversold earlier, which you can see there overnight, and then the market continuing to move to the upside till it became overbought with divergence, so the market had continued to move higher, and then moving back to the 200 MA, the R2, and then the market just finding support and sideways overnight. Meanwhile, the pound having a bit of a bounce, which it needs, having dropped this week. Let's just have a quick look, see how much the pound has dropped this week. So let's just draw this into yesterday's low. Down 600 points on the pound in this move, and oversold as well in the daily chart. So expecting again some sort of bounce in this market. So if we just go from here down to here, gives you the targets for the pound in the daily chart, and in the 30-minute chart you can see yesterday a market crushed once more, which is why Japan have come in now and making a fixed rate each day. Once you get government intervention like that, it's going to fail anyway. Here you can see that the market is retracing quite nicely, 62% in the bigger picture at this time for the pound. And then finally, let's have a look at the metals markets. Well, yesterday another down day, down to this support that we drew in, 23.97 was it, or 22, not 23, 22.83 is the low there. There's the 97 one I was thinking about. 22.83.84. You can see there the market picking up bit of support there, oversold on the downside at the moment, back through the 89, which you could really remove. And then the upside targets for this market, if it's allowed to move up, the narrative's changed. And like I say, with that headline this morning on Sky News of troops being sent to Ukraine, is you can see there's a bit of a change in the narrative, and that's why I'm sort of saying that if we go back to the warmongering in the mainstream, we could see the market move low, and I'll show you why in just a second. And obviously here with silver getting a bit of lift as well, is also indicative of that. If we look at the 30-minute chart, again, you can see the slam yesterday at 1 o'clock. The market moving up beforehand, trading to the previous day's close. It was overbought, and then the market absolutely hammered down where it found some support there. Massive volumes, got your retracement in there, and the market's been moving up to the previous day's high. We'll have to wait and see, of course, what happens today. Gold also, you can see there, finding some demand overbought and trying to move back to the upside as well. So it's just put these in here as well, so you can see that the market coming off that 1889 back above $1,900 as well at the moment, and that's because the headlines are switching back to the war and other countries starting to join in. US dollar down, obviously got to the 103, which you can see there. It made a new one actually at 103.90 and a half. 103.80 was the previous high. No doubt it'll go through this, but it's going to need a bit of a breather. And again, another reason why the metals markets are moving higher, because you've got a lot of supply in this market, and the market also had a bit of a big down move when that news was announced yesterday. And finally, the reason I'm mentioning this is that crude oil is moving to the upside once more. If this starts to move up, then you're going to see the stock markets come under a bit of pressure on the downside. And I'm just wondering whether that is the intention of yesterday, is just to try and hold the market overnight, because they are going to try and move it sharply lower. I'm not putting a foot in both camps, but I'm just trying to form an opinion, not that you really need one, because you can just trade off the technicals of how it would play out, more so to hold a position, I suppose, because if you look at the stock markets, let's say whether it's the Dow or the DAX, we're approaching areas of resistance where the market could actually come back, and by utilizing the fundamentals with the others, if it was to actually start selling off, you could hold it a lot longer. That's the point I'm getting to. You can hold the trades a bit longer. Okay, that's it for this one. Have a great weekend. There'll be no alert on Monday. I will see you in Tuesday. The US markets are open as normal. Okay, that's it. As ever, thanks for watching. See you in the next